The news broke like a thunderclap. US and China announce trade truce. In an instant, the world's attention snapped to the screens as anchors scrambled to deliver the story and analysts rushed to interpret what it all meant. Headlines flashed across the globe, from New York to Beijing, London to Sydney, and for a moment the world exhaled. People everywhere paused, realizing they were witnessing a turning point in modern economic history. After years of escalating tariffs and economic conflict, the two largest economies had finally stepped back from the brink. The threat of a full-blown trade war, which had loomed over global markets and everyday lives, seemed to recede, at least for now. The announcement, made after a tense and closely watched summit in Seoul, promised a one-year pause in tariffs. It was a rare moment of agreement, reached after marathon negotiations and intense diplomatic pressure. For millions of workers, business owners, and families, it was a lifeline, offering hope that jobs could be saved, businesses could recover, and uncertainty might finally ease. This was more than just a political victory. It was a moment of relief for people everywhere. Global markets, businesses, and workers everywhere felt a surge of cautious optimism. Stock tickers soared, traders cheered, and boardrooms buzzed with new possibilities. The world economy, battered by months of tension, glimpsed a chance for stability. But beneath the handshakes and smiles, deep rivalry remained. The body language was stiff, the smiles forced, reminders that old wounds had not healed. This was not friendship. It was a strategic pause, a calculated move by both sides to buy time and reassess their positions. The world knew that the underlying competition was far from over. The truce offered stability, but skepticism lingered. Analysts and experts warned that the deal was fragile and that the path ahead would be anything but smooth. Previous deals had crumbled, trust was at an all-time low. Memories of failed negotiations and broken promises haunted both sides, making every word and gesture subject to scrutiny. The world watched, wondering, is this the beginning of the end, or just a lull in the storm? In cafes, offices, and homes, people debated what would come next, uncertain if peace would last. For now, businesses could plan ahead, cautiously mapping out the next year. But no one was under any illusion that the core issues were resolved. The fundamental disagreements remained, lurking beneath the surface. The truce is a test of commitment, of trust, and of whether both sides are truly ready to de-escalate. The clock is ticking, and the world is watching to see if this fragile peace can hold. The world holds its breath, waiting for the next move in this high-stakes game, hoping that this time the promise of peace will last. How did we get here? What forces set the stage for one of the most consequential economic confrontations of our time? This conflict was decades in the making, rooted in the rapid rise of China as a global manufacturing powerhouse and the shifting balance of economic power. The US ran a massive trade deficit with China, importing far more than it exported. But the dispute went deeper than numbers. It was about values, technology, and the future of global leadership. Washington accused Beijing of unfair practices, intellectual property theft, forced technology transfer, and heavy government subsidies that gave Chinese firms an edge. The trade war erupted in 2018 when the US imposed sweeping tariffs on hundreds of billions of dollars worth of Chinese goods, aiming to pressure Beijing to change its ways. China retaliated swiftly, targeting iconic American exports like soybeans, pork, and automobiles, hitting US farmers and manufacturers hard. What began as tariffs quickly escalated into a tech war, blacklisting companies like Huawei, restricting access to advanced semiconductors, and sparking a race for technological supremacy. The US cited national security concerns, warning of risks to critical infrastructure, while China saw these moves as an attempt at containment and a threat to its sovereignty. The Biden administration kept most policies in place, even expanding export controls and tightening restrictions on sensitive technologies. Washington built alliances with Europe and Asia, seeking a united front to confront Beijing's trade and tech practices on the global stage. The rivalry became a defining feature of US-China relations, shaping diplomatic, economic, and even military strategies. Hundreds of billions in goods were affected, disrupting supply chains and sending shockwaves through the world economy. Businesses and consumers everywhere felt the impact. The stage was set for a long-term strategic competition, with both sides maneuvering for advantage in a high-stakes global chess match. This isn't just about trade, it's about who will shape the 21st century economy, lead in innovation, and set the rules for the digital age. The conflict is far from over. As both nations double down, the world watches, knowing the outcome will define the future of global power. The trade war's shockwaves disrupted global supply chains overnight. Tariffs drove up costs, forcing companies to rethink their strategies. Decoupling from China became the new buzzword, but shifting production proved slow and costly. Countries like Vietnam and Mexico struggled to match China's scale. Consumers paid the price as goods became more expensive. Small businesses, especially in the US, were hit hard. Some closed for good. The intended protection of American jobs often backfired. Investment slowed as uncertainty reigned. The IMF and World Bank warned trade tensions threatened global growth. Instability became the new normal. The world economy grew more precarious for everyone. The Seoul summit was months in the making. The result? A one-year pause on new tariffs, a desperately needed circuit breaker. China agreed to buy more US agricultural goods, offering relief to American farmers. The US eased some tech restrictions, but only on non-sensitive items. China pledged not to weaponize its rare earths monopoly, calming global supply fears. Yet the deal sidestepped the core issues: subsidies, intellectual property, and forced tech transfers. Experts call it a truce, not a resolution. The real fight is only paused. The countdown to tougher negotiations has begun. The Seoul truce was a chess match of economic power. The US wielded tariffs and tech controls, targeting China's ambitions in semiconductors. China struck back with tariffs on US agriculture, pressuring American politics. Its near monopoly on rare earths was a powerful bargaining chip. Both sides felt the pain: US consumers, Chinese factories, and global markets. China's economy faced headwinds. The US saw no easy victory. Mutual vulnerability forced compromise. The truce was pragmatic, not friendly. Both sides blinked, choosing a pause over escalation. Well, what do the experts say about this fragile truce? Around the world, leading voices are weighing in, each offering a unique perspective on what this pause really means for the global economy and the future of international relations. In Washington, Dr. Emily Thorne calls it a tactical pause, not a strategic shift. She emphasizes that while tensions have cooled for now, the underlying rivalry remains unresolved. The US wants stability, but still sees China as a systemic competitor. Policymakers in DC are cautious, knowing that competition over technology, trade, and influence is far from over. The one-year clock is ticking. If talks fail, tariffs could return stronger than ever. The threat of renewed economic conflict looms large, putting pressure on negotiators to deliver real progress. In Beijing, Professor Li Wei sees the truce as a chance to focus on domestic growth and tech self-reliance. He notes that China is using this window to accelerate innovation and reduce dependence on foreign technology. China trades short-term concessions for long-term strategy. Leaders in Beijing are playing the long game, prioritizing national resilience over immediate gains. Neutral voices like Dr. Anya Sharma in Geneva warn the truce is only a bandage. She cautions that without deeper reforms, the risk of future conflict remains high. The global trading system is damaged, and the world risks splitting into rival blocs. Supply chains are being redrawn, and uncertainty is the new normal for businesses worldwide. Most experts agree this is a fragile, necessary pause, not a reconciliation. The sense of mistrust lingers, and true cooperation seems distant. Both sides will use the year to strengthen their positions, preparing for whatever comes next. Behind closed doors, strategies are being refined and alliances considered. The US will friendshore supply chains and build tech alliances, seeking to reduce vulnerabilities and reinforce its global partnerships. China will double down on self-sufficiency, investing heavily in advanced manufacturing and homegrown innovation to weather future storms. The truce is a timeout, not a step toward peace. It's a moment to regroup, not a sign that the contest is over. The real test comes in a year. The world waits, watching closely to see if this pause leads to progress or a return to confrontation. This is a ceasefire, not a peace treaty. The one-year truce leaves the core conflicts unresolved: subsidies, intellectual property, and market barriers. Deep mistrust runs both ways. Each side sees the other as exploiting the system. Domestic politics make compromise nearly impossible. US leaders can't appear soft on China. China's leaders can't show weakness. The stakes are high. If talks fail, tariffs and tech wars will return. The truce could be a missed opportunity, a brief pause before renewed conflict. The global economy's stability hangs in the balance. Can two rivals manage their differences without open economic war? The truce ignores the most dangerous flashpoints, Taiwan and the South China Sea. Taiwan remains a red line. US support and Chinese threats make conflict a constant risk. A miscalculation could trigger military confrontation and global economic chaos. In the South China Sea, China's claims and US naval patrols keep tensions high. Any clash could escalate, drawing in regional powers. These disputes are beyond trade. They threaten the entire relationship. Economic talks exist in the shadow of unresolved explosive geopolitical conflicts. The future holds two paths: renewed conflict or cautious coexistence. If the truce fails, tariffs return, the tech war escalates, and the world splits into rival blocs. Or the truce holds and both sides manage competition without open conflict. Success for the US means China plays by global rules and respects red lines. For China, it's about continued growth and global standing without US suppression. The challenge: can these visions coexist? Can China rise peacefully? Can the US accept a multipolar world? True stability requires strategic empathy and recognition of each other's interests. Building trust is the monumental task ahead. The one-year truce has started the clock. The world is watching.